If you want to become a pro at property investment, you need to plan and strategize your journey. Just like anything else. Here are 3 strategies which you can use to maximize your investment returns. Number 1, buy well, never sell. Most of you might ask, what do you mean, Navin? You got to buy at the right price and never plan to sell your investment property. Now, life might throw different things at us, which you might want to sell the property. If that is the case, you need to, but you need to be holding the property as long as you can. The reason being, more time it takes, the more equity you will accumulate in your investment property. Always remember, property is a marathon and not a sprint. You are not going to make quick bucks out of property investments. The longer you keep your property, more equity you're going to accumulate and more properties which you can use your equity and buy. This is a true way of expanding your property portfolio. If you look at the property magnates, that's exactly what they do. After all, you don't have to think about capital gains tax at all when you use this strategy. Number 2, pay attention to outgoings and taxes when you do your property investment. It's easy, very easy to forget what you're up for in the long term. If you just consider this is the property price, this is my rental return, you're fooling yourself. At the end of the day, what really matters to you is what goes into your pocket at the end of the month, at the end of the year. You need to be aware of what are the taxes I'm up for and what are the outgoings I'm up for. If you look at the taxes in Australia, you're looking at stamp duty, land tax, income tax, capital gains tax. Please speak to your accountant before you get into any investment so that you know what sort of taxes you're up for. Let's talk about outgoings. If you talk about a rental return, that's the gross rental return. You're not going to get that whole money to your pocket. There will be outgoings such as property management fees, letting fees, council fees, water rates. If it's an apartment or a townhouse, you will have owner's corporation fees. Make sure you do the numbers and calculate what goes into your pocket every single month. This is absolutely critical. After doing an investment, if you're disappointed, that means you have not done your due diligence in terms of your numbers. Number 3, do the due diligence about the location or the suburb you're going to invest into. Make sure you talk to your property investment consultant and get a report of all suburb data, statistics on the suburb and the location you're investing into, because it is absolutely critical. You need to be aware of what has happened, what is going to happen, what's happening right now in terms of numbers. Always remember, every one of us have opinions, but numbers do not lie. I'm talking about things like the rental yield for the past 10 years, capital growth for the past 10 years. What's the outlook of capital appreciation for the next 5 years? Population growth in the next 10 to 15 years. What are the amenities right now? What are the amenities which is coming up in the future? What are the government plans for that suburb? All these aspects are absolutely critical for you to make that decision. So please don't forget to do your own due diligence along with your property investment consultant about the suburb or the location you're investing into. If you can think of any other good strategies which you can apply in your property investment journey, please comment below. If you have any questions, need any advice, please reach us out. We are more than happy to help you. And don't forget to click on the subscribe button to get more updates and more educational videos.